You have the sort of top 7 tier 1 cities like Frankfurt, Hamburg, Berlin, Munich, where a lot of foreign investors have already invested a lot of money. Then we have the second tier of cities, which are about 20 to 30 cities with very good microeconomics, be it good universities, be it good local manufacturing. So there's Germany is very decentralized, and we have a lot of these local, very strong middle-class cities. So I think that's a very important point going to Germany in any asset class. That we look at the locations in those cities and look at it from there. And also in the micro housing, if Rainer can fill on that, I mean the micro location in the cities is also very important.
Yeah, I think the challenge really is when you're talking to international investors, ours coming from the Nordics, is to teach them to extend their view, being broader than just the top 10 or top 12 cities in Germany, because the product works giving the metrics of the resi market as brilliant in a city like Erlangen or Nürnberg or Bonn or Heidelberg as it would work in Hamburg or Frankfurt or Munich or Stuttgart. And that's the main thing. And the other thing is then the definition of scalability. The people we are talking to are more focused on 100 million than on 1 billion. And so there's a perfect fit, because development takes more time than just investing in existing stock. And as regards micro-location, there's no one-fits-all plan. It's pretty much depending on where you are, how big is the city. So if you take, for example, Frankfurt, it's easy to commute from one end to the other in 25 minutes, which is not the case in a city like London or even in Berlin. It takes you a little bit more time. So depending on which city you're talking about, there are certain aspects which need to be taken into consideration whilst micro-location. And for us, one major challenge is the strong competition with classic resi development, which is a big play in Germany. It's all focused on fragmented ownership. You have a high owner-occupier ratio in such developments. And they are absorbing most of the opportunities as regards available land for construction. So what we are doing to overcome this is we're taking a very strong look into conversion of office buildings, going back to the 70s, 80s, where CBD areas have changed, where requirements from a technical point of view have changed, and these projects or these properties have fallen out of the life cycle, but from our point of view are quite perfect for conversion. And this brings you to attractive spots in inner city places at very decent entry prices for such schemes for repositioning as micro-living products.
It being a very federal country, people expect 150, 200 bip change from Frankfurt to, say, Nuremberg. Not so much anymore. You're going in at a 5% gross, or say 5.25% into these office locations as well. Retail is sub 5, resi is sub 5. So this isn't some hick town that you're buying into where you think 7% is your norm. That doesn't happen. It's the stability. It all shifts downwards quite rapidly, and you have the pension funds. You have these are quite professional markets by now. Very stable. Again, income, not valuation. Even though looking at it now, your returns should be increasing because present values of buying have dropped dramatically, or the pricing has risen dramatically. So don't expect a high yield shift or a high yield differential between A and B locations, especially if you're looking at top product in those locations. If you're looking at old B, C product, fair enough, you will get but I'd leave that where it is because you're not really going to make a lot of money on that. So always keep that in mind as well when looking into these B locations. I think there's great value there, especially the university cities with a young population, Heidelberg, Freiburg, Bonn, Göttingen, well, not so much Göttingen, but let's go Nuremberg, etc. Even, we've started buying in Leipzig and Dresden again now. So for the first time going back into these eastern countries, eastern cities, I wouldn't look at Chemnitz yet or Cottbus, but indeed Leipzig, Dresden are back on the table, and they're well performing, because there hasn't been a lot of development. And you've got to look at fundamentals. The oversupply is quite, but maybe you've got these numbers as well. I find that a lot of the developers nowadays are looking at residential, even the old big, commercial developers. If Hochtief still exists, etc., a lot of them are doing resi. If they can get resi, they'll do resi because the returns are better. But that also means for the office sector, which is, I think, being highly sold undervalued here by Peter, but that's okay. There isn't a lot of supply coming in the market. Very little speculative development, leaving Frankfurt out of the picture. Maybe, but even there, it's the lowest development pipeline in a long time. Hence why, looking forward again, the fundamentals, your stability of income will potentially ease off some of that yield shift going out when things go a little bit sour and money becomes more expensive. So a lot of focus on resi, which will it turn to an oversupply? I don't think so, because there's a lot of pent-up demand still there and still available. Very little construction on the office side. And retail, Germany's always been very protective of its inner cities, so the green area retail is very limited, so it's really refurbishments of inner city locations, ideally with inner city shopping centers, so that again strengthens your urban areas, which helps your residential again, and low supply on commercial. So all in all, a good place to go, but so don't go. There's enough money there, so just look at it from abroad and just say, well done. Don't go there.
The retail warehouse space, you can even go to places that you've never heard of, like Bensheim or Weinheim, which are 45 minutes south of Frankfurt, and it's much better to own the best retail warehouse in those places than the 8th or 9th best retail warehouse in Frankfurt, from an asset management point of view. You just don't have to make the mistake that you're buying an asset that is much too big for the local catchment, or is in a catchment where you have decreasing population. But if you're buying in the richer southwest of Germany or Bavaria, or some islands of growth that exist everywhere in Germany, where a big employer is who can't move because all his workforce is centered around that, then you will be pretty fine.